Okay, let's get started here, and then I'll just continue to let people in. So, Michael, I'm going to hand it over to you, and you can open us up.
Thanks, Doug. Hello, everyone. Great to see you. I'm glad you guys got a chance to join. We didn't have anything planned until the fall, but we were chatting in our weekly meeting a couple weeks ago, and there's some updates in terms of what the government has done and some updates in terms of the projects. And so we wanted to I said, let's get everyone together and provide some updates because that's what we're here for, is to make sure that you guys know what's going on. And so that's why we said, let's get a real simple webinar together, even if it's just 10, 15 minutes, just to go through some of the things that the progress that has been made by the Red Trust team and how some of the new government announcements impact or may impact our results here as a team. And so that's why we're here, and to answer any questions. We're here to answer any questions that you guys have. So thank you for being here. Doug, over to you. Let's see. Doug put together our
Well, we have our
standard,
introductions here. Thank you, Michael, as always. We just remind people who we are, but I think that's we've got that in here. We've the three of us here. We've got our some of our board members, our trustees are on this call as well. Again, I apologize for the interruptions. If you hear that beeping in for people, I'll let them in as they come aboard here. Nothing's changed as Michael said, but you did say, Michael, in the fall, we actually have our next meeting is scheduled for June for our next update meeting. So that'll be a traditional update on the projects and everything else. Obviously today, as Michael said, we just we're having a discussion is what it is. So we'll open it up for some questions and have some back and forth. But I'm going to let John and Michael take the lead as on these two new topics that have kind of come up from the initiatives of the both the provincial and the federal government. Again, our projects, everybody knows. I think if they're on this call, they know what our projects are, and that's where we're at. So, we've included this screen in here. We've introduced this in the last couple webinars, and it was to give people an idea, since we know we can't sell. And a few months back, it was very bleak in the market as far as any activity that was going on, and we had questions asked of what happens if we have to wait it out. And we were running numbers to see, what low prices of gross sales of the existing lands would we have to hit to give us still a decent rate of return. And that's what this slide is. But we're going to keep highlighting. These are projected, they're targeted returns, and they are not guaranteed results. Obviously, results are going to be guaranteed by basically whatever the market yields us and the offers that we hope to get. And that's really a good segue into why we're doing this today, because we need the market to start to begin to go back to business as usual in building homes. And then when they start doing that, they absolutely need land. And more importantly, they need entitled land that's ready, shovel ready. And that's where these two changes really come into play. So I'm going to let you, Michael, take that, or John, you guys can take that and start off and talk about the development charge reductions.
Yeah, I can take over. Doug, if you can actually move over to the projects, and then I can discuss all the different changes from the government and how it affects our sites. So with Wellington, all the price points meet the less than 1 million, which is the maximum threshold for the HST. Because Wellington is ready, the program, what the HST from the province and the federal rebates are, that you have to sell the homes between June the 1st, 2026 to June 27, I believe. So there's a 12-month window, and that is to push sales for new homes. That will reduce, on average, if our homes are selling for 500,000, I believe there'll be more, but if they were 500,000, that will reduce it by round about $130,000, so between $65,000. That will come off top of the price. So how it works is when you sell the property, the homeowner needs to pay for it, but gets a rebate before it closes. But the builder has a window from when they sell the home, which is the next 12 months, till 2031 to actually build the units. So, which is perfect for all our sites. The DCs and reduction on Wellington, we're still waiting to here, how that is going to proceed. Wellington is a different location where they are waiting till 2027, early 2027, to decide to go reduce the DCs or not. But the HSC will count to our sites on Wellington.
Maybe let's just go back and do a recap then on the HST. And so just for sake of people to understand how that the effect on Wellington is great, but maybe just go back through the highlights here. In general, the DCs will be reduced by voluntarily if a municipality chooses to participate, is what I understand.
By reducing DCs by 50%, the federal and provincial will match the rest to pay for the infrastructure.
And then, of course, you've already described the HST is really in the sweet spot is those $1 million lower units, attainable units in our market today, which all of our properties are, attainable.
Okay, good.
Sorry, I said you one of our callers there. So I'll go back, John, just to Cambridge, and you can do that. And then, Michael, if you need to jump in, just let me know. We can go back and forth.
Yeah. Cambridge is the same scenario. Remember, we are still waiting for each individual municipalities to decide if they're going to go forward with the program. And the majority of the larger city municipalities that are pro-development will take on the up to 50% reduction. For this site, for Cambridge, all our units, if they were being built for condos, will meet the less than 1 million price point. So they will get the maximum of the HST rebate, which is substantial when you look at how many units there are.
Yeah, you start adding up, it actually absolutely makes a huge difference.
So do you want to move on to Port Colborne is similar scenario, all low rise. Every single unit will meet the HST rebate, and the site is virtually shovel ready. So any builder that buys this site can start pre-selling this year, and more than likely can have it all built out in 4 years, which will meet the HST rebate. And Port Colborne will be more than likely be reducing the DCs. The DCs are already low on Port Colborne, but they will be reduced again because they are pro-development.
But yeah, maybe explain that part of it. I know we assume that Port Colborne, from everything they've communicated to us, is a very pro-development community, with lots of potential from the expansions of Welland, and then the whole migration from what would be old school Niagara Falls, getting out of the city center and out to the communities, especially with lifestyles again along the lake there. Do we see a municipality, like all of our municipalities seem to be on board? Do we have any indications of what direction the municipalities are going, or is there?
No, we are still waiting to hear. We have heard through other builders that there are some smaller towns which are not pro-development, so they are not reducing the DCs. But we're not hearing anything from our sites yet. I mean, we are pushing the planners and the municipalities weekly to find out which position they're going. Doug, is there any more questions you want me to answer?
Well, we're really just open for a discussion. So, Michael, if you want to jump in on there, we can go back by product, or we can go back to the impact of the DC reduction in the overall marketplace.
Yeah, I'll give you my thoughts, because I've been watching this for years and months, and since this came out, and this is at the macro level, we've got this meaningful shift in policy. So I'm looking at, the government is starting to not only recognize, but starting to take action on this housing issue we have in Canada in general. And so you look at from the very macro is, all right, they're actually doing something about it. They're putting dollars down, which is this reduction in taxes. And so this $130,000 on a million is significant for somebody that were to either buy the land, buy the property, or the end units to retail is where we all get out of this as a country, is when people start buying end units again, the retail buyer. And so even though our product is probably not $1 million, if it's half a million, that's still a $65,000 savings for people when people buy these end units. And so pre-selling them now, we're starting to see that starting to have conversation where before this announcement, there was no talks of even putting up a sign and trying to pre-sell units across the country. And so we're seeing that the shift in policy, if it's not enough, hopefully the government will continue to push, continue to put things in place. And this will have a ripple effect across the entire development cycle because it makes these homes more affordable for that retail buyer. It also improves the economics for developers and builders, which is what we want to do, and increase that likelihood that projects will move forward. But it comes relevant to our strategy. That's the macro. But at the Red Trust here, it's relevant for our strategy because our goal is to bring land to a stage where it's ready for developers, ready for builders, it's shovel ready. And when you see policy like this, it will improve affordability for buyers, it will improve margin for builders, it'll improve confidence for lenders, because it's also the lenders that play a part here, and the confidence. We're directly improving the demand for the type of assets that we have decided to hold as a general partner and as a group of limited partners. And so the assets we hold directly get impacted by policies like this. And an important distinction, as I was preparing for today, I was thinking about the distinction for us is we are not holding early stage land. We're holding assets that are approved or like draft approved. We're holding land that are the most impacted by these policies. They are positioned for building and they're ready for builders to move in. And these policy announcements and indicators of government mindset are one of the very first steps that builders need in order to have that confidence. And it's a big step. It's not every step, right? The cranes aren't going up the day after the announcement is made, but it is that step, that big step in the right direction. So these are the things that I'm noticing as I'm looking at. And then when we layer on these reduced development charges, now we're seeing the pressure coming off both sides, further giving the builders confidence, further lowering the cost to build. So now is it not only cheaper to buy for the retail buyer, but it's also cheaper for the builder to build. And now we're reducing some of that margin compression that we may have talked in previous webinars. But this is the exact things that we need to unlock this stalled development activity all across the country. And we got the federal change, and then Ontario in particular also created that provincial change or reduction in HST. So in Ontario, we have it the best out of every province. I think there was a couple other provinces, but since our investments as a group here is focused in Ontario, we know that we've got the double whammy, the federal tax reduction and the provincial tax reduction, which doesn't flip a switch overnight, but it's a very positive move in the right direction, which is part of the reason we wanted to highlight this for all of you and tell you what the impacts are to our specific investments. Some investments have no impact. For example, apartment REITs or multifamily REITs, things like that. There's no building. There's no impact to those groups, those investors holding those assets. But to us, investors holding these types of assets, we're massively benefiting from these. So, I took down some notes here. We're going to get more builder confidence. That's what I'm looking for, builder confidence. I'm looking for project restarts. So projects that have stopped, builders are halfway through and they're restarting. Those are the things that we're going to start to see translate to what we want, which is land demand. And that's how we make money, with land demand. We have to see the builder confidence come back as step one. Step two is the projects have to start again. And then when that happens, the builders will start to want to buy land again. And that's where we benefit as a group. So we're probably not, as many years out as maybe we thought in January, now that we have some changes. If these changes have the impact that they really are designed to have. And so that's the impact that we're seeing here. So I know that's a lot, but I have been thinking about this and trying to simplify into what are the steps that I would want to see in order for this tax break and development charges to really benefit us as a group. And it would be the builder confidence come back, project restarts, and ultimately demand for land comes back. And then we see offers in our properties, which is what we all want. We want offers coming in.
So we've got our first question in here, Michael. Thank you for that bit. Maybe we'll do is just remind everybody, you can put your question into the chat. I believe that I can also unmute you. I think if I get prompted there, but I have to figure that out in real swiftly. But we'll deal with the first question. Also encourage you to put your questions in the chat. And so the first question from Richard is basically a statement saying, I think developers still worry about if people will put a deposit in the next 12 months, still risks for them. Once they buy land, there's so much sure people buy moving forward. And this is the stall. This is where we're stalled. This is exactly why things are not moving, because a builder can't build unless they can get financing approval. And if they can't get deposits and sales, to a ratio that satisfies their financial institution, they're not going to get any money for construction. So they certainly don't want to put money out for purchasing land and having to sit on that land and have those carrying costs, of which we incur right now. It's a chicken and egg situation. So I don't see it's a question there so much as, do we think that this will move the entire market? And I think, as Michael's already spoken to it, it's definitely going in the right direction. And it might be a bit of a fracture, to use Mark Carney's words that he's been using quite heavily. It might be an even further fracture in the ability for small builders to get going versus a larger builder. A larger builder might have access to and ability to hold land and buy land, which is indifferent to us. We don't care if it's a large builder or small builder, as long as they pay the closing costs on the purchase of our property. So there may be a fracture in the industry like that, but at the bottom line, in my opinion, there's a massive amount of pent up demand from the trades, from the labor force, that's like, I want to get back to work. And whether you're a small builder, mid-sized builder, or a large builder, you have to make a business decision. Is this the time that we have to get back to work, even if our margins, as we've spoken to before, are going to be lower? If we're going to work in a 6 and 7 and 10% margin instead of a 12, 15, 18, 20% margin, should we get this back going? Should we start the engine back up, or are we going to lose our valued trades? Are we going to lose more people to other industries? What's going to happen, with the construction world? So we are all waiting to see what that plays out to be. Again, not an answer to the question, but it was more of a statement back to the statement, I guess.
Yeah, my thoughts. That's a great point, Richard. But the use case that you're pretty. So the answer is yes. Developers are still worried. I mean, they're still going to be worried because it's still just step 2 out of 10. But those developers that are, and I'll call it builders, because really we're narrowing down from someone developing property all the way to just building, because we're developers here. We're doing the paper development. But builders, if they've got to the point, Richard, where they're accepting deposits, then they've already worked through that risk on their end, and they said, okay, we're going to accept deposits, and we know there's still a risk that once they buy that they won't close, but that's part of the risk we're willing to take to get building. The builders that are really worried about it, just to use your words, they're just not going to accept deposits. They're still going to be in this waiting phase like everybody else. So it's kind of the use case of what would happen here. But I think I agree with Doug. It's more of an observation than a question. And I think that's how you're putting it, Richard, is builders are still, builder confidence will come back, but it's not going to be 100% until people are buying again, right? So they're still going to be worried. They're still going to be concerned. They're still going to be risk managing these situations where people put a deposit and then they don't end up closing in the future.
Tanya, some comments?
Yeah, well, we're just going to add to what the market pricing is. So we all know that the real estate market has dropped, but new homes have dropped by 80% compared to resale. And that's mainly because of price per square foot. And a resale home today could be bought a lot cheaper than a new home, even though a preference people prefer new homes. But with the reduction in HST and the reduction in DCs, it creates a level playing field, which means now a same 3-bedroom resale home is very similar to a brand new home. So the builders believe that will really push more buyers who have the pent-up demand, or the people that have been waiting on the sidelines to buy the new homes. That's where they're going. And a few builders I'm talking to already, they were holding till 2027. They've already started selling new homes this year. That just shows some confidence, especially from southwestern Ontario.
And Richard's got another point here around population. We hear the people on the sideline to buying, hearing this several years. The immigration is done and Canadian population is negative now. It is the real news people are ready for. Yeah, I try not to play economist, Richard, in terms of trying to predict the macroeconomics of where the country is going, because that doesn't change our decisions day to day here. Our decisions are based on these real assets and the due diligence and the things we have control over. But these are the things we've got to be aware of, is just general residents of the country. Like, is the country growing? Is the country shrinking? Is our GDP growing? Is our GDP shrinking? Because all of that impacts every aspect of the company and of the country, including real estate. But I know Canada still has an open immigration policy. We're not letting in the 2 million or whatever people a year, like we were 5 years ago or a few years ago. But we're still 400,000 a year last I saw in terms of what the immigration is moving into Canada. So the population is still set to increase from those numbers. But Richard's got a great point. I mean, we got to look at population.
Immigration
for the economy
for the next 3 years is locked in at 1% of the population, so 380,000 is it. So it's still a net positive, but it's, I think, to the point is, are we losing citizens? Are we, is there more attrition? People dying off? Then do we need to be 2% just to stay at a 38 million person population? And I agree. I don't have numbers, and I don't know where we have numbers, but as far as what our macro demand across the country is for housing, which we know anecdotally every community says they need more housing. So I don't think that has changed.
Yeah. And then what we would look at, Richard, how do we manage that? Because nobody on this meeting can control population growth, right? We can't control how many babies are made, and we can't control who moves in and who moves out. But what we can do is understand population migration within a country. So even if a country has population decline, you're still going to have pockets that are going to have population growth, micro pockets within that country. But again, it doesn't really impact this conversation because we're not looking to acquire and buy as a group right now, right? We are looking to stabilize, or maintain our expenses in a certain way and execute our strategy, always being aware of multiple exit strategies. And so if we were acquiring property, population would be very important because we would want to find those pockets and predict where population is going to cluster. In terms of what we're doing here, it's really a moot point in terms of any decisions that we make as a group of population, but really something important to watch.
Yeah,
Yeah.
Michael, we are seeing a population shift out of downtown Toronto. So we are seeing that between 1 and 2 hours outside Toronto, we are seeing a population shift. I don't know the metrics, but the realtors are telling me this is what they're seeing. And they believe the biggest growth is going to be the 1 to 2 hours, and that's mainly due to price and affordability.
Yeah, population shifting. I mean, Wellington, if anyone's been there, it's beautiful. That's where I would want to shift to, in terms of if population went down and people shifted to these cluster markets. I still think we're well positioned in our markets. But again, something to be aware of, but not something that directs our selling decisions as a group.
Let's talk about our. Sorry,
go ahead. I forgot to mention I was with the Niagara Economic Director last Friday, and he was explaining to me all the new jobs that are coming, and they've got a $1.3 billion investment into the Niagara area from a Japanese manufacturing company. I don't know if I'm allowed to say it, but that's what I've been told, and that will create another I think it's 1,500 jobs in the area. So it's there is a lot of growth coming near our sites.
Yeah, I know. On top of that, there's also the announcement from Honda and Toyota to, I mean, it doesn't directly affect our housing, but it affects those automotive jobs that are sacred to Ontario and protecting more automotive jobs. So that partnership they've announced for supply chain management in Ontario is very big. I was just going to go back. We've got another question in here. We got a couple questions in here, and it goes back to our activity from our real estate brokers for any offers in our properties. So, as we've stated in the last few webinars, we do have technically three real estate firms right now that are marketing properties. Two of them are directly on our properties of Port Colborne and Cambridge. One, of course, based out of Toronto, one based out of KW. And then we do have a third that does also brokerage through other projects that we have. And they're well aware of our projects as well. So we are getting some trickle in notes. We have not received an offer. Bottom line is we do not have a paper offer to share. But we've had a few questions and a few tire kickers recently, and it is an indication that spring is here, the changes are here, the government's showing stability, the government's showing now recently obviously strength in their ability to set a mandate with the majority they have. Um, will we see some U.S. stabilization? I doubt it. I think this is our new world, so we've got to do the best we can within our Canadian market, and we do have to attract people in further to the last question. But we are seeing those investments, as John has highlighted. So we have not seen an offer yet, but we have seen activity, which is a good sign. The other question was to do with whether or not we would put back on the table building out a project. And I think the one that really comes back is where we left off with Wellington. If Wellington, if somebody came to us with an offer that said, "Hey, we'll build it out with us," we absolutely would take that to our trustees and allow for the trustees and then, of course, subsequently the unit holders to weigh in on that decision. Our preferred right now, like many people, is just a nice clean exit, nice clean offer on the properties and move on. But I think, as we all know, and I don't think my partners disagree, all we want is an offer. Pay for the offers and let us make a decision as a group. And we'll lean on our trustees and again back on our unit holders.
Yeah, I agree. I mean, everything's an option. That's what we're always looking at in terms of multiple exit strategies. But the economics have to make more sense of building it out than they do of selling it. And right now they don't make more sense. And so if those economics are better, then yeah, we bring it to the trustees, we get approval, and we move forward.
Mostly because of duration. I just want to point that out. It's length of time.
Yeah.
We've held the property already for 3 years, so to build it out, you need to have some, you need to be in a momentum market going up, and with a little bit of momentum, with a little bit of increase in prices year over year that are predicted in the next little while, it doesn't give a much spread. So time would make our returns, I think, undesirable for the build out time for us. Somebody else coming in clean, they build quickly, rent it up or build it up and sell it out, and they'll do quite fine.
Yeah. Yeah, it would have to make a lot of sense. But we're all looking for the same thing on this call. We're hoping we want the offers to come in, and we're doing the best we can in marketing and finding the right salespeople to get our deals out there.
Yeah, and it's further to what I was saying is like it doesn't just stop with the realtor groups that we have. I know John is a great example of this. He's at a lot of different Toronto-based, and now he was in Niagara, in contact with their Welland partners. I do tend to be more on the 401 corridor and in our area, but we're spreading the word every chance we can get of the value of our initial proposal, initial thesis on the lands that we own, and Michael's kind of said it. I got Wellington on the screen right now. I mean, these are lifestyle attractive places that are located within 5, 10, 20 minutes maximum of a well-funded medical facility and have, high-speed internet, have the liquor store, the beer store. They have some cultural things, but most importantly, they have jobs. So you can attract both the lifestyle buyers, the last home buyers who just want to have that lifestyle community, but also you can attract the ones who still want to work and in that case. So that's
Doug,
those are all positive for us.
you said something great there. I just want to touch on as we wrap up here because we're at time. But I just want to mention something because can you go to slide 3 there, Doug? I just looked it up. And just to kind of get back into what our role is as your general partners. Our role isn't to influence the economy or change population or, create jobs. That is not what we do. And obviously, we have no purview over that. Our goal, our job is to, before we ever met you, come up with an investment thesis and a business model that works. And our job is to execute that relentlessly. And that is what we're doing, the three of us. And I want to go back to this approach here that you all saw many years ago when you decided to join us on this endeavor. Capital protection. We have three things that we look at in our investment thesis. Capital protection is paramount and always the first consideration in any investment. Due diligence must be continuous and aggressive, and exit strategies need to accommodate every possible scenario. This is what we're living by, and this is how we're guiding our actions and our decisions. And let's just talk about this for a second, Doug and John, because I want everyone to know, like, we're working for this group because this is our job, is to really focus on what we can control on. So I think about capital protection. This is always our number one priority, and you're seeing this in the impacts and where we are with the Red Trust. We have a structure put in place, and it's done exactly what it's supposed to do, which is protect your capital. We are not over leveraged. We have not taken on debt. We are managing our expenses. We're not forced to sell. We're not in a position where we have to take discounted offers to survive. And so I want everyone to know that capital protection was our number one tenement in our thesis, and it's exactly where we're at. We are better than 99% of what I've seen out there because of the decisions that Doug and John and I have made. And we're doing our best. We're only human. We're doing our best working within this economy. But I want everyone to know capital protection, number one, it's doing its job the way that it was designed. Today's market, that's not the norm. There's so many projects that are under pressure, that are being sold at losses, that are coming in at losses. And although we can't control that, it could still happen. But we're really focusing on this capital protection, and this is by design, not by luck, in terms of what we've done. Number two, due diligence. We call it, a continuous and aggressive due diligence. And even though we're not acquiring properties right now, we are still doing due diligence. We are interviewing the salespeople and the brokers that we've decided to allow to market and sell our properties. We did interviews before we just chose somebody. So we have done due diligence on the people. We're doing due diligence on, the environmentals and all of the things that are still coming up. The approvals that need to happen, the development charges, the HST, resolving issues when they arise with municipalities and regulators. John is on the front lines of that with our team on the ground, making sure that we are, we're working with the municipalities and doing that due diligence every day. And we're constantly evaluating market conditions and buyer behavior. And so that's what we're doing for all of you for the due diligence side. We're still working heavily on this. We're making sure that when our assets go to market, they're clean, they're understood, and they're purchasable by the retail buyer. And then lastly is number three, we put exit strategies in there. We want to accommodate every possible exit strategy. Deanna brought up potentially building. Sure, absolutely. That's an exit strategy. That's an option that we are constantly looking at different ways of we're doing this. When we originally built this model, the business model, like all, have a core exit strategy. All right, we sell to builders once things are complete. And that still holds. That's still a very solid exit strategy. That's still a primary exit strategy. But the market environment has changed in a way that none of us could have ever predicted. So now we're actively looking at different types of buyers for exit strategies, different types of deal structures, different timing scenarios. So we're actively managing the exit strategies because it's our job not to force an outcome, but to create the best possible outcome given the circumstances that we're in. And so I wanted to just bring us back to that general thesis and let everybody know that this is the work that we're doing. We're focusing on working within the business model that we created. And frankly, this business model is what's been the protection of this Red Trust versus others out there because of all of these things. Anybody can talk strategy when things are going well, but the real test of the business model and the strategy is how it performs under pressure in a difficult market. And even though we don't have sales and exits, and we only exited 1 out of 4, we're showing you today that the principles that we have built this Red Trust on are holding up in this market. They are holding up and they are working.
Yeah, that's all great points, and it was good to bring that back to our core principles. Like, I just want to focus on due diligence again, and when we say continuous and aggressive, Michael hit on there quite quickly. We don't stop just because the project is stopped, because what we're looking for in there in our due diligence is also market research. And that's the side that we will take any bit of information from yourselves on this call, from a broker who's asking us about listing their properties. We'll go and have those conversations. We don't just close the door and say, oh, we don't need it. We just need our one agent. Every person who shows an interest, we treat them, with respect, but we also extract as much information as we can out of them. And we're looking for anything that gives us an edge. And it's been unfortunate that we've been in a stalled marketplace. It doesn't allow us to stretch our legs as much as we hoped and utilize some of this, but as I keep phrasing, like, our lands are sitting in very, very attractive locations, and they're all entitled, ready to go with minimal changes that any builder or developer would need to do. So hopefully, crossing our fingers, as someone has said, stay positive, on the chat. Hopefully we start to see these offers now coming in. Insult us with an offer, we can always turn it down, but just want to see the market start bidding again.
Yeah. And that comes up all the time, just so everyone knows that we get that question. I think that it gets emailed into the team as well. Hey, why don't we just sell? Right? Hey, why don't we just sell? Well, to Doug's point, it's like we don't have any offers. And every offer that comes in we take it seriously so that we can return capital and preserve capital. So next steps is, do we have another date on the board right now? I think our date is September or October.
No, it's June. You keep saying September. You got it. Stop. Don't listen to Michael.
June
3rd. We have June 3rd, which will act as our AGM, which again is just a read through. There's no voting at our AGM, just a read through on our annuals. Every year we kind of get clips a little bit with our year end. It never gets done until May. We try and have it in May, and then we don't have the documents back. So if we push it to June, just again as a point of reference, point of disclosure, we never push meetings out further because we're trying to buy time. We enjoy doing these updates. Obviously, we invite people to, on these discussions, but that'll be our next webinar. So June 3rd, and then September 16th is marked in the calendar. So keep the eye out for emails from Mary. As I always say, if you're not, if you're getting emails, you guys are all getting them because you're on this call. But if you are ever uncertain, if you need to keep getting emails from Mary's system, Mary, it doesn't necessarily always from her, but it comes from the automated system. Yes, you want to keep getting those emails because that's how we can stay in touch with you. And if you have an address change or a phone number change or any questions, just send it back into her, and she triages it. She doesn't do all the work. She just triages it to accounting or to Michael, John, myself, development side, or our sales team, whichever it is that needs to deal with the question. So,
all right, June 3rd.
June the 3rd.
Let's do it.
All right. Thank you, guys. Thanks for good to see everybody. Thank you all for joining us, and take care. Enjoy the sunny day. I think it might be our first day of real spring here today. I'm not sure, but we can get outside soon.
Thanks, everyone.
Thank you.
Take care.
Bye-bye.